In this video, I'm going to be talking about what is going to happen to house prices in the UK. Now, if you find any of this useful, please make sure you hit that like button and you subscribe to the channel, because I do each month as we get more data coming out. Also, this video relates to an article on the Money to the Masses website, which we do update regularly as well. There's a link to that article on screen and in the notes below. So if you want a more frequent update, then you can look at that in between each of these videos that I make each month. Now, there are broadly three things that are going to influence house prices. There's supply and demand. So in the area where you live, there could be changes to the housing stock. There could be a new housing estate being built. There could be a new demand, a new development in terms of infrastructure that creates a greater demand for house prices, pushing them up and down. There can also be things like the health of the economy, which starts to influence house prices more generally. And of course, interest rates. When interest rates, which are set by the Bank of England, the base rate, as that goes up and down, that starts to have an influence on mortgage rates. And as mortgage rates go up and down, that obviously influences the amount that people are willing to borrow or are able to borrow, which in turn therefore impacts house prices. So what I'm going to do is I'm going to go through a number of house price indices that exist out there that give an indication as to what has been happening to house prices, and then you can use that to form your own judgment as to where house prices are headed as we go through 2023. Now, the UK House Price Index is probably the most accurate of the various house price indices, as it's calculated based on completed sales, and that's both cash sales and those with a mortgage. The wide-ranging data is sourced from HM Land Registry and other government sources. However, while it gives a very clear picture of what is going on in the housing market, there is a lag to the data that is published. Now, the latest data currently available relates to November 2022, and it showed the average house price in the UK fell by 0.3% in November 2022, having risen slightly in October 2022 with a year growth of 10.3%. I'm showing you all of these indices on screen as I talk about them. So just pause it if you want to look at the details more closely. Now, the next index I'm going to talk about is the Nationwide House Price Index. The Nationwide House Price Index is calculated based on Nationwide's own data of mortgage approvals. Now, the latest data from December 2022 saw the index fall by 0.1%, following a fall of minus 1.4% in November 2022. And that was the biggest fall in 2 years. Economists at Nationwide believe that it will be hard for the market to regain much momentum in the near term as economic headwinds strengthen, with real earnings set to fall further and the labour market widely projected to weaken as the economy shrinks. Additionally, high borrowing costs are impacting affordability at a time when inflation is taking its toll on household finances. Now, next up is the Halifax House Price Index, and this is calculated from Halifax's own database of approximately 300,000 mortgage approvals. Now, as you can see on screen, recent data shows average house prices fell by minus 1.5% in December 2022, having actually fallen by minus 2.3% in November 2022. Next up is the Rightmove House Price Index, and unlike the other indices that I've mentioned so far, which are based on mortgage approval data or completed sales data, the Rightmove House Price Index looks at the average asking price for properties listed on the Rightmove portal. This is a good reflection of sellers' confidence, but doesn't clearly demonstrate how many of those properties end up going under offer at a much lower price, or in fact don't end up selling at all. Its most recent data shows a fall of 1.1% in November 22, and that was followed by a fall of 2.7% in December 2022. So where might house prices head next? If you take that data I've mentioned and project it into the future, it would suggest that we are likely to see some weakness in house prices. But in 1992, the average house price fell by about 20% following a rapid rise in the Bank of England base rate. Now, we've had that over the last year, that rapid rise. So that could mean that we could see some significant weakness in house prices. We don't know just yet. We'll have to wait and see. Also, bear in mind that the cost of living crisis will likely mean that more people will fail the lender's affordability assessments when they apply for a mortgage. Of course, that will therefore produce a headwind for the property market. So none of these are predictions, but they are more statements of fact of what's happened in recent history and also history from back in the early 1990s. Now, if you're interested on how to value your own property, the best way you can do that is by looking at sites such as Rightmove and Zoopla, where they have features where you can look at data for recent sales, and they can even estimate what your property is worth. Now, these tools aren't completely accurate, but they give you a good starting point to work with. Also, don't forget you can look at the land registry where you can actually see sales data. But another good indication is by getting local agents to come around and give you a valuation. Now, they will do that for free. You should go and get a wide range, maybe up to 3 or more agents to come around and value your property, and then you look at the average of those asking prices that they suggest. And of course, don't forget there is going to be a wide range in that, and of course they are just the prices they're suggesting you put the property on, not the actual price that you'll get when you sell. But it's a good guide. If you found this video useful, don't forget to like this video and subscribe to our channel so you can get future updates on where house prices might head in the future.